How's it going, everyone? It's Sam. I just wanted to bring a video to you on an update of one of my favorite stocks. I added more to it today, and there's some big news on it, some cool things coming, and some stuff that I think you should know if you are interested in growth stocks at all, or if you already have Tattooed Chef. Now, I want to do a little comparison too, because I think people are not seeing the potential here in Tattooed Chef yet. So we're going to get into all that. If you guys don't mind hitting the like button, I appreciate that. Also, there is a link down there to Patreon. In case you want to see what I buy and sell every single day, you can check that out down below. I just put in a discount code so you can get up to 16% off with the annual plan. So definitely check that out if you're interested. And there's a link down there to Webull in case you want some free stocks. Just deposit $100 on their platform there. So Tattooed Chef came down about 3.5% today. And I want to do this update because almost everything, like 80% of the market, it seemed like, at least in my portfolios, was actually green. And Tattooed Chef was actually down 3.5%. So I think it's worth talking about why this is. And I think there are a couple of reasons, even though there is good news and some stuff that I want to share with you. First of all, we have this, a prospectus from UMB, our second largest shareholder, saying that they may sell up to 2 million shares. So that's the first thing. So when the largest shareholders wants to start selling some of your stock, it doesn't look great. The other thing is there is a high percentage of short interest. So maybe some people are seeing this and maybe they're seeing UMB also and they're thinking maybe I don't want to be invested. I mean, the short interest has come down recently, but still about 27% of the float is actually shorted, a pretty significant amount. So that is one thing to keep in mind. Now, there was this Oppenheimer conference I wanted to talk about. So it had its annual consumer growth and e-commerce conference, and they had some of the team here from Tattooed Chef on. Now, I just really like Tattooed Chef. First of all, I really like their food. I like the financials. I like how quickly they're growing. I like that they're in the food industry. Now, they are going to start offering some more pizza. So they said that plenty of opportunities for us to introduce our brand to every retailer across the country and to be a leading innovator. One of the top categories in the plant-based space is frozen pizza. Tattooed Chef is a clear leader in that space, having launched their new line of vegan, gluten-free, 100% plant-based pizzas in April. Now, I haven't been able to try most of these. At my local Target, they haven't had many of these, but these look freaking good. These look like they are going to taste really good. From there, though, they reiterated a couple things I think are really important. First of all, they're going to pump out 62 new product SKUs in 2021. At least that's their goal. In addition to that, the CFO said that they are manufacturing a significant amount now. They're going to be able to keep this current manufacturing capacity, and it can support up to $500 million in annual revenue. So we still can grow revenue a significant amount just based on the manufacturing capacity we have right now. I mean, when they acquired that other business earlier this year and acquired it, they said that they're going to be able to get hundreds of millions of dollars of revenue from them. She restated that the goal for 2022 is $300 million. Now, I think that can be hit pretty easily. I think they're going to over deliver this year, and I don't think it's going to be too hard to expect $300 million next year. They say that they're on a clear path to $1 billion in revenue by 2026. Now, they go through a couple other things down here talking about how they're the number one branding category in average dollars per store selling, outselling Amy Stouffer's and Lean Cuisine at Target. They're one of the top frozen food brands that they've ever had at Target. But I want to go back to this $1 billion in revenue by 2026. This is a goal that I think we can hit. That's about a 20 to 25% revenue growth over the coming years. I want to take a look at this and compare it to some other food giants. So obviously, this is going to be very different than this company is going to be very different than something like Coca-Cola or Pepsi, where a lot of people just invest in it because they don't have to worry about it pretty much at all. At least that's what they think. But the thing is, if we're looking at 2026 and we're talking about $1 billion worth of revenue, that puts us at a price to sales of 1.7. for 5 years out. Now, I'm going to compare this to today's numbers in Pepsi and Coca-Cola. The reason I say this is because these two companies really haven't grown revenue much at all. This is actually Coca-Cola, and they've gone down consistently over the years. And some people would say, oh, 2020, they weren't able to sell as much in stores because people weren't getting like fountain drinks and stuff. But they were doing this in the years before. They went from 48 billion in 2012 down to 34 in 2018. So Coca-Cola, their business model is a little bit outdated, I think. They're not really changing with the times, and they're kind of bloated, right? We saw some of these chains just go out and cut a lot of workers. Now they're still bringing in billions of dollars worth of net income, but that doesn't really make up for the fact that they are losing value every single year. I mean, take a look at some of these numbers. $1, $2 in earnings per share. At $55, that puts them at a 28, 29 price to sales ratio, and or price to earnings ratio, and they're actually becoming less profitable as time goes on. They're bringing in less revenue. So once we start looking at their numbers here, let's take a look. Coca-Cola price to sales ratio is 7.1. Now, that is pretty high for a company that has decreasing revenue. People are paying this much for a company that is becoming less and less attractive as time goes on. Like, I don't know what kind of long-term investors would really want Coca-Cola. I realize it is still very different than something like Tattooed Chef, but let's say Coca-Cola stays the same and it doesn't even go down in revenue like it has recently. Let's say it could stay the same for the next 5 years. You're still putting your money in something that has a price to sales ratio of 7, or price to sales of 7, and you could be in Tattooed Chef, which in 5 years is going to have a price to sales ratio of just 1.7 right now. So the price to sales ratio is crazy. And the thing is, Tattooed Chef is growing so quickly, they're going to become profitable, very profitable in the coming years. The thing is, Coca-Cola is not going to change much. Now, we can take a look at Pepsi. Now, Pepsi has a better price to sales ratio. It's actually around price to sales ratio of 3. Now, their revenues haven't really gone down as much as Coca-Cola's. You can see that they've actually gone up maybe about 5% over the last 10 years. But still, it's still a much, much slower growing business, right? Tattooed Chef most likely won't stop growing in 2026. It's not going to stop growing at $1 billion worth of revenue. I mean, take a look at some of the other competitors. They're in the 70 billion range. They're significantly higher in terms of revenue, in terms of net income, than Tattooed Chef will be in 2026. So whether Tattooed Chef buys out other brands or whether they get bought out by something like Pepsi or Coke, that's going to be something that we'll have to see as time goes on. But the thing is, I realize that Tattooed Chef is in a very different bracket from Coca-Cola and Pepsi. But, if you're looking at anything that is going to return you a decent amount, anything that's going to grow, you're not looking at Coca-Cola, Pepsi. You're looking at things like Tattooed Chef. You're going to look at growth stocks that are growing pretty consistently. And that's why I love Tattooed Chef. I like the brand. I like the balance sheet. I like the income. I like where they're going. I like the industry that they're in. And I think they're going to continue to grow. Unlike these other bloated brands that have to cut back because they are, they've just grown too much and they have too much crap. They have too much fat. Tattooed Chef is lean and mean right now. No pun intended on their plant-based products. But that is why I love Tattooed Chef. I'm happy to pick up some more shares today. I picked up maybe between 5 and 10% more of my total portfolio in Tattooed Chef, and I will continue to do that. I mean, Tattooed Chef has grown 5x in sales over the last 3 years, and they're going to continue to grow 4x in sales over the next 4 or 5 years. And I think that, again, is a little bit conservative. So I will be happy to pick up more shares of Tattooed Chef whenever anyone wants to sell them to me at a discount. Now, of course, I'm not a financial advisor. Anything can happen. Tattooed Chef could go back to 15 if the market sells off, right? The Fed talked about raising rates in 2023. So it sold off a little bit. A lot of other stocks did too. But anything can happen is what I'm trying to get at. Of course, if you guys want to see what I'm buying on a daily basis, you can check out the Patreon. Again, there's a new discount if you guys want to try that out down in the description below. Also, there's a link down there to Webull to get some free stocks if you want to try that out. You can buy Tattooed Chef right there, pre-market and post-market in case anything crazy happens and you get a nice deal. Definitely check that out. Thank you guys, and I will see you in the next video. Bye.